everybody, it's Jessica Stone at Stansberry Research, and I'm joined now by Scott Garliss, who of course is the editor of the Stansberry Newswire. We wanted to take a look at the auto sector and what the purchases of autos and the sort of direction of auto sales in the United States could do or could indicate for the U.S. economic recovery. Of course, this week we got Toyota and Honda earnings out. What did they tell us about the impact that the virus is having on sales?
The virus is clearly having a negative impact because people haven't been driving, right? Economic activity has been shut down. But again, we don't want to get too hung up on what's already happened. We want to get thinking about what's coming down the road. We want to be thinking what's happening 6 to 8 months from now.
I think it's so interesting, right? Like more and more, I'm getting in the car just to get away from my house and my kids sometimes. I can imagine that that's probably the case for a lot of people. And some of the other analysts I've talked to say that in other countries, like China, for example, people feel safer to take a car than they do on mass transportation. So do you think that that is going to be a trend moving forward that will help auto sales and at least help buoy that part of our economy?
I think we're seeing that data out of Germany. Germany is one of the economies that is really starting to open up first. And they're showing that this past weekend, traffic was up and traffic jams were up 7-fold from where they were in late March when the economy was shut down.
Yeah, I think I was reading that more people in Germany, like in China and many other parts of the world, would rather drive. And that's especially interesting in Germany, which is a place that's very environmentally conscious. So if people are taking their cars, it's a choice, right? It's not just a convenience. I wanted to ask you about the impact we're seeing on gas prices, because of course we've done a lot of coverage on the fact that oil prices are in the tank. If we have more people driving, are we going to see, higher demand for gas?
Yeah, I mean, expectations are super low. Oil is going to be one of the most natural ways people are going to look at economic demand. When they think the economy's in the tank, they're thinking, hey, oil demand's going to fall off the charts. We saw oil prices go negative. And now, as things are slowly reviving, oil is going to be one of the first places people turn to for demand picking back up. I know personally, I ride my bicycle a lot whenever I can. I've done over 10,000 miles the last couple of years. Since the coronavirus lockdown started, I've probably done 17 or 1,800 miles so far. The one thing I've noticed when I've been riding was when I first started after the lockdown went into place, it was like biker's paradise. There weren't any cars on the road. Now I'm seeing traffic return back to normal levels. When I drive by gas stations, I'm seeing people waiting in line to get gas. I'm seeing the 7-Eleven stations associated filled with people buying candy bars or lottery tickets, whatever they're doing. But activity is picking back up.
Yeah. And, I think we're going to see that go throughout the summer, because if the airlines are not operating at full capacity, and if people are worried about whether or not they're safe to be in a vehicle, I think we're already seeing from some of the early data from car rentals and RV rentals that people are going to drive places and not fly places, or take a boat, I guess, is potentially an option, but definitely going to drive over another form of transportation.
Yes, yeah, I would completely agree. And, while we might be seeing some vacation rental cancellations, I would think that was initial reactions. I think we'll see them start to pick back up as the summer goes along. And say like on the East Coast, I would imagine a lot of the beaches here are going to wind up finding out that business rebounds a lot better than they're expecting right now.
Ever the bull, Scott Garliss there. One more question for you. We had a lot of emphasis on the auto industry and on saving and bailing out the U.S. auto industry in the last recession. Why don't we hear more about that this time?
That's a great question. I don't know why we haven't heard more about that. I think because there's been so much focus right now on saving the companies, that things like oil demand, in the airline industry, there's so much traffic in terms of people think of passenger traffic. What they forget about is shipments that are stuck on those airplanes with all those people that are going underneath of you. That is an important part of making this economy work. And I think what the government's looking at this, hoping, is that if this is a short-term problem and it's only going to last a couple of months, that the auto industry should be able to band-aid its way through this and get through it. Now, look, if it becomes such a big problem that the government needs to step in, I'm sure they will. They do not want to see that industry fall apart. Way too many people are employed.
Yeah, I mean, that's certainly something we saw in the last recession, just the power of the U.S. auto industry and all of the parts makers, everything down the supply chain to the health of the U.S. economy. Scott Garliss, always good to talk to you. Thanks for your time. And if you would like to see much more content like this, please subscribe to our YouTube channel. You can find us on Facebook, Twitter, and Instagram. That's all for now. Thanks for watching.